Hey everyone, Tyler Ross, Ross Real Estate in Warrenton, Virginia, rocking my quarantine basement gym clothes because I'm going to exercise right after this. And I'm here with my friend and professional partner who I've worked with a lot of times successfully, batting 1,000, Mr. Dave Couk. I'm throwing it to you, my friend.
Oh, thanks. Um, there has been, Tyler and I have been talking about this now for the past week. And obviously, with the chaos in the current markets right now, there's a lot of questions out there, a lot of unanswered questions, and not all of them can I answer. But what I wanted to do today, and I've shared this with Tyler, was just kind of let people know from the front line, from the trenches, what has been happening in the mortgage market.
Yeah, well, let me jump in. I'm sorry to interrupt you, but to give people context that most people know you, but those that don't, Dave is a mortgage broker with Integrity Home Services, and prior to that, 27, almost 3 decades of experience in the financial markets as a financial advisor. So I'm going to listen and hang on to every single word that he has to say. So please continue on.
Well,
We're getting
let
into
me
that.
let me let me preface by saying I don't have, nor have I ever had, a crystal ball.
Mhm.
All I can do is kind of give you a sense of what we've seen at my company, what we've seen in the last 10 days, what's happening, and how I think that should be interpreted. So kind of back up a little bit to the week of March the 4th. As some people know or don't know, for many years, the mortgage market, the rates determined by the mortgage market, have kind of followed the trend of the 10-year Treasury note. So when 10-year Treasury note has tended to drift higher, so have mortgage rates. And conversely, when the 10-year Treasury note was drifting lower, banks lowered their mortgage rates to entice more business. And that's kind of been what we've seen traditionally. The week of March the 4th, we got to a point where on the 4th, I believe, if I'm not mistaken, that for the first time in history, the 10-year Treasury yield dropped below 1%.
Wow.
So that week, I'm looking at my desk calendar, Wednesday, Thursday, Friday, we saw that yield floating below 1%. And that began the tsunami of refinance activity, refinance inquiries all over the country. And then on what I refer to as a really historic day, on March the 9th, the 10-year Treasury yield dropped below 0.5%.
Wow.
Middle of the day, we got down to 0.49 or 0.48, I think it is. And banks were scrambling to adjust their mortgage rates. And in that chaos, there was definitely opportunity, because there were some people who were pre-qualified. They had sent in all their documents, had us pre-qualify them, inquired about getting refinanced, and were able to make a decision and pull the trigger and lock a rate. And after that point, throughout the rest of that week, last week, we saw the banks push back in a really big way. Imagine, there's a couple of analogies I can think of. One is you're at an all-you-can-eat buffet and there's all this food out there, but you can only eat, a pound of food or whatever it is that you can eat. And at that point, it doesn't really matter that there's all this food out there. You just can't eat anymore. So what really kind of happened to the mortgage market is that with this, I'll call it a tsunami wave of refinance activity that happened very, very quickly. Imagine a python eating a 6-foot alligator. That python is going to be hungry again at some point. But until that alligator moves through that python's body, that python is not looking to eat anything else.
Mm-hmm.
And so the banks have sent a clear signal that for at least the time being, they have all the activity they can possibly handle. And we're seeing it through them jacking up their rates on mortgages. Some rates that I looked at only a week ago are now the same loan is a point and a quarter, point and a half higher, and in some cases even more, depending on the type of loan. So a lot of people have asked the question, well, you know, the Federal Reserve came out and said they were going to lower rates to almost zero. How come I can't get, how mortgage rates aren't going any lower? And the reason is because mortgage rates are like the 10-year Treasury note, a function of supply and demand.
Mm-hmm.
So when there's, you know, the only thing that I think you needed to learn from Economics 101 was the concept of supply and demand. And when demand goes up, prices go up. And when supply increases, prices go down. And right now, the banking industry is trying to digest this giant alligator, if you will, and have that thing move through the system.
So what were some examples of some of the incredibly like low rates that you were able to take advantage of for some of your borrowers? And then when you talk about them jacking the rates up, like what's your opinion on that rate level also?
Right. So it was a really difficult day on March the 9th because the phone just never stopped ringing, and you've got all these folks that want to try to take advantage of this, but only some people were in a position to make a decision and lock a rate. You know, if we haven't pulled your credit report, for instance, and we don't have a populated file for you, if we didn't at that time, it was really hard to tell you exactly what rate we could get you without being in a position to actually pull up live pricing on our system and actually lock the rate. So some examples, just talking to folks in my office, I know that there were some people that were fortunate enough to lock a 30-year rate below 3% at 2.75.
Wow.
You know, there were some of those. There was one particular individual, and I don't know anybody else that got lucky enough to do this, but one individual I'm aware of locked a 15-year mortgage rate at 2.375.
No kidding.
And that evaporated as quickly as it appeared. Like I said, this was just a like a tornado. March 9th was a historic day. And so the markets are trying to make sense of all this right now. And so we have since, of course, seen pricing get disrupted quite a bit. And the banks are pushing back, just their way of stomping on the brakes and saying, hey, enough is enough.
So in most of your conversations now, you know, of course, people, one of the first questions they ask, I'm sure, is what kind of rate can I get now? So are the rates still pretty good?
Well, they are. However, there's a lot of volatility right now. So, and I'll get to in a minute what we think the proper way to handle that is. But for the time being, if someone, and this happened multiple times last week, folks would call me and say, what is the rate I could get right now? And or they would text me rather, or send me an email. And by the time I responded to their email or their text, and then they got back to me a half an hour or an hour later, rates had moved.
Wow.
We're seeing wild swings. So the only way that someone can get a specific rate is if they have a file, their credit's been pulled, all of their information is correctly populated into that file, and we go and pull up live pricing, and they have us on the phone saying, where is it right now? And we read it to them, and they say, I want to lock right now. That's the only way you can guarantee anything.
So there was nothing anybody could have strategically done to put themselves in place to do this. This is a product.
No. And part of it, Tyler, is because nobody saw this coming.
Right.
I mean, it really was, you know, who would have ever thought they'd see the 10-year Treasury go below 1%?
Yeah.
And the banks sure did. And so they didn't really know quite how to handle that. And they did what they had normally done, which was lower their mortgage rates. And people went crazy because it was all over social media and all over the news. And, you know, we got hit with a tsunami
Yeah.
of refinance activity. So the banks are up to their gills right now, trying to process all of that.
Yeah. And so how about, you know, outside of refinances, are you seeing much demand for pre-qualification letters or, you know, processing a lot of loans right now? Yeah.
Yeah. So one of the things that we're hearing from some of the agents that we work with is that they're still seeing demand. People still want to buy houses. I mean, you know, my old adage is that everyone's paying a mortgage. You just want to be paying yours instead of somebody else's. And a lot of people have, you know, we've got several borrowers, mind you, that recently sold their house and are in a short-term situation living with parents or relatives or friends that have a ratified contract right now to buy something else because they don't have a place to live. They just their house. You know, we're in a low interest rate environment, and at the end of the day, everybody wants a roof over their head. And as I know you would advocate on your side of the street, you should own your own home. So there is activity out there. I think one of the things that's kind of benefited us in this area is that even before this coronavirus situation, you and many other agents in the area were faced with multiple offer situations. We've had a lack of inventory for a long time, and properties, especially properties that have been below the 375 and under, get snatched up almost immediately. And so the spoils go to the quick decision makers. You know, if you scratch your head and think about it too long, that house is gone. And that's been the environment that we've been in. And while we don't know what's going to happen going forward, I think similarly to having been told that the folks that would fare best against a virus like this are the folks that were especially healthy to start with.
Yeah.
I know that a lot of NBA players have been tested positive for this virus, and I would have to say that I'd be interested to see how well most of those guys fare because they're in an elite condition and physical shape. And you know, it wouldn't surprise me if you know, most or all kind of shook it off because they were well prepared. Their body was to withstand that. And I think our market, with all this shortage of inventory and people still wanting and needing a house to buy, I think that's certainly going to help in some respects.
Yeah, that's a really nice analogy, and it'd be easy for you and I to jump off onto the tangent of the importance of your own physical health because we're both of those guys. But yeah, the market was really cruising. I think as this virus, not that I have a crystal ball either, but there is a demand for a place to live. And you have your adage, and mine is always, you know, it doesn't matter what you pay for the house. It matters what your mortgage payment is if you're going to be living in it a long time. So it's all about cash flow, whereas you and I have more kind of lumpy income based on performance. But if you've got your cash flow and you're comfortable where you are with your payment, that tends to be my advice is always, you know, don't push your payment. You can push the price up or down, but you know, it's all about your payment if you're going to live there for a long time.
One thing that I think is especially important, and I wish that I had, in retrospect, started off with this, and that is, if I was a slick salesman, in all of this panic, I could probably talk most anyone into doing a refinance. I have to tell you, as you know, I'm not a slick salesman, but I probably talked as many people out of doing a refinance as I have the converse. And the reason is because just because rates are lower does not mean you should refinance your mortgage. There are other considerations. And of course, my phone rings, and a lot of it is just people that bought a house only 6 months ago and see that rates are down and they think they should refinance. And my question is, well, how long are you planning to stay in the house?
Mm-hmm.
That's a really important consideration. And I think when you consider that you're going to have closing costs, and albeit on a refinance, the closing costs should be lower than they were on your purchase, you still have them.
Mm-hmm.
And most people are going to add those closing costs to the loan amount. So if the savings per month is divided into what the cost is, the closing cost, your recoup or break even period should certainly be short enough that you're going to be in the house long past that.
Right.
Perfect example. I had someone call me the other day. They just bought their house 6 months ago. When we did the math, and I told them, I said, hey, this is that basic grade school math I thought you would use at the time, but it's really simple. When you take that closing and you divide it by the monthly savings, your break even on this particular borrower was about 4 years. And I said, how long do you think you'll be in the house realistically? And she said, 4 to 5 years. And I said, well, it probably doesn't make sense.
Yeah.
If there's a chance that you're maybe at best going to break even, don't add to your loan amount.
Mm-hmm.
So that's one consideration. Is certainly the first question should be asked is, how long do you realistically think you're going to maintain ownership of the house? And I say maintain ownership because not live in the house, because you may move out and keep it as a rental property.
Mm-hmm.
It may be a property that you're going to own and hand it down. You know, it could end up in your estate. In a case like that, obviously the recoup period doesn't have to be as short to make it an attractive thing to do.
Right.
The other thing that people can do, and some are doing, is if they have some equity in their house and they've determined that this is in fact a house they're going to be in for a while, they're shortening the term by dropping into a 15-year mortgage at a lower interest rate.
Mm-hmm.
And a lot of people are doing that, and that's certainly a consideration. But again, I would say you only want to consider it if you have a really strong sense of how long you're going to own that property. And of course, the last thing, and this might be something that more people will be giving consideration to based on the economy and the current conditions, is if you've got some decent equity in your house, but you have accumulated some other debt, some consumer debt, particularly high interest rate credit card debt, it might behoove you to do a cash out refinance and eradicate all that other debt to put yourself in a stronger position to weather, some slowness in the economy. I would think going into any sort of potential slowdown, having a whole bunch of debt is probably not the ideal situation to be in. And there's plenty of folks out there that have enough equity in their house, and some of my clients are doing this right now. They're just paying off some other debt. They can't deduct the interest on it anyway.
Mm-hmm.
So choosing to get rid of it at a much, much lower interest rate. And that would really, in my opinion, be the third reason why you would consider doing a refinance, not just because rates are at all-time lows or lower than where they were.
Yeah. I just did that. Yeah, I just did that same self-analysis, looking at rates and going, for me personally, going from 4 1/8 to 3 1/2, and the analysis didn't pay off for me. It just, I'm not going to be in my house, or don't anticipate being in my house long enough to recoup that money.
Mm-hmm.
So despite the significant change in rate, it still wasn't worth doing. So let me ask you what you all are doing at Integrity Home Mortgage, right now that might be different as a result of all the happenings.
Yeah. So here's what we're doing, and here's how we're handling things. We have always been, our business model has always been to support agents and their buyers in helping them get a home. That's been our priority, and we've prided ourselves on being able to deliver closings in 30 days or less. That's kind of how we made our name. That's what we hang our hat on. And we put ourselves in a position to continue to be able to do that in spite of this refinance wave. And the way that we're doing it is this: we are every refinance that we are doing, we are reserving the right to push that closing date out to accommodate our purchase closings at the end of the month.
Mhm.
Simple reason that someone doing a refinance doesn't have a contract with a specified close date. They can they can close whenever we can get them closed. So there's a little bit more flexibility on a refinance. So what we're doing is we're working very closely with our closing department on all of this refi stuff to, once we get that loan approved and cleared, we reach out immediately to see how soon the borrower would like to close or can close. And if it needs to be extended, we'll cover that and push it out. But we're juggling those things around so that we can continue to get the purchase stuff closed in 30 days or less on time, as promised. Our ops staff has done an amazing job. These people are working 7 days a week right now. We've got, I got a bunch of emails on Sunday afternoon and Sunday evening from ops staff on some loans. So everybody's pulling the oar as hard as they can to keep up with this, because we don't want to disrupt what's happening on the purchase side and taking care of our buyers.
Yeah.
We're getting almost daily updates from our president, Adam Huddleston. I think it's one of the things that's great about his leadership is that he is a lender too, with a book of business. He's got agents that he has worked with for a long, long time. So he's actively involved in the lending side of it. So he is feeling and seeing and experiencing all of this and making adjustments on the fly, which is what all of us are having to do. So he's been very good at sending us videos on a regular basis, just letting us know where things are, what we need to do. One thing that is especially important for you and your clients in this environment is you've heard me say for a long time that my number one piece of advice to a would-be buyer is to get with a lender and get pre-qualified way in advance, generally 3 to 6 months before you're driving them around in a car looking at houses.
Mm-hmm.
I think now that's more important than ever.
Couldn't agree more.
For the simple reason that with these wild swings in interest rates, we want to be able to make sure that they can qualify if rates go up more. If the banks push back even more and rates go up more, are they still going to be able to qualify and purchase that house? And the only way that you know is to sit down with a lender and go through the full process. The other piece of that, and this came recently within the last couple of weeks, it's got a happy ending to it, but it had a kind of a sad start. I had pre-qualified someone back in September when they were putting their house on the market, and they had excellent credit scores. Everything looked great. They were pre-qualified. They started hunting for a house, and when they sold their house that they were going to be paying off the existing mortgage, and they did so, and they got a contract on another house, and that a credit report's only good for 90 days.
Mm-hmm.
So we don't want to just keep pulling credit. So when that credit report expired, they were still in the house hunting process, had sold their house, paid off a bunch of debt. So you would assume, and rightfully so, that the only direction their credit scores would go up would even be higher, because now they have even less debt. And in this particular case, when we re-pulled the credit, the scores had dropped significantly because of an unexpected collection that hit the credit report, and the borrower knew nothing about it. It was a small bill that had gone to the old address of the house that he had just sold.
Tell me it was Comcast. Tell me it was Comcast.
And it wasn't Comcast. It was a different, it was a medical collection, but I think they were premature in turning them over to collection. You know, why would somebody that just sold their house that's sitting on all this cash not pay a $300 bill, right?
Mm-hmm.
So this significantly affected my borrower's rate, and we scrambled very quickly to get a. He called the creditor immediately and told them what had happened, and they agreed to provide him with a deletion letter. And that deletion letter we sent out to the credit bureaus, and hopefully by next week, it should get that off the credit and the scores will rebound as they were. So that's another reason to be very vigilant in this pre-qualification process, so that you are prepared for every scenario, because you've got to be more now than ever. You've got to be ready, locked and loaded, and ready to pull the trigger.
Yeah, I'm completely with you. I find the same thing with sellers that say, okay, we want to put our house on the market in a week. I'm going, you can't eat an elephant in a week. You got to take one bite at a time and stretch that period out for a while. In somewhat of a hard shift with all this social distancing going on as a result of the COVID-19, the coronavirus, my dad's office that does closings, Morrison, Ross and Whalen in Warrenton, they consulted with somebody that works in an ER to understand their protocols when it comes to sanitizing and cleaning, and so they've exacted that for all of their closings. Because there's only so much you can do virtually. For people that want to refinance or want to get pre-qualified or want to actually go through the process of buying a house and getting a loan, for somebody like you and me who tend to be so hands-on with people, like how much of this can you do virtually, you know, with the social distancing in place?
All of it. It can all be done over the internet, over the phone. You bring up a good point. We've gotten a few memos from several title companies in the last several days that they only want the people who are signing to show up for the closings. Traditionally, I like to show up for all of my closings. It's a you know, to me, it's a happy moment for my borrowers. You're handing over the keys to them. In many cases, it's their first house, dream house or whatever, and it's a really happy occasion, and I like to be there for that. And I also want to be there for any questions that they might have.
Yeah,
we've been told by several title companies, please don't come. We know you like to be there for the closings, but we don't. The only people that we want there are those that absolutely have to sign documents. So I think we'll see some of that. We got a list print out the other day of all the courthouses in Virginia that are equipped to do electronic recording. So, you know, we're going to see more of that. And I think, you know, the good side of that is that some of these counties that have kind of been in the Stone Age, it's going to force them to kind of catch up with the times a little bit, you know, and be more virtual with the way they do things.
Yeah, I think this experience will create some new habits in our respective industries. At my office, Ross Real Estate, my agents are continuing to do work, however, putting new concepts in place. We've got a tremendous photographer and videographer in Brian Esposito.
Oh,
and
yeah,
his
Brian's
people.
awesome.
He does incredible work, and he's using his Matterport camera to help support agents in doing virtual tours, and I've done some great videos with him. So, you know, so as long as people are still comfortable going out and being clean and socially responsible, there are houses for sale. And in fact, I have 1, 2, 3, 4, 5 people that are actively trying to get their house on the market, you know, just in the last 2 or 3 weeks, and continue to want to ramp up to get listed in the next 10 days or so. Which is just another example of needing to be way ahead of time.
Right. And that's good to know, because I have some borrowers that are moving because of work from the West Coast that are moving here, and they've got to go out and find a place to buy.
Yeah. Yeah.
You know, so that activity is still going on. You know, I certainly don't want to minimalize, you know, what's happened, because there is a lot of uncertainty, but I'm not a big video game player, but obviously I'm familiar with those video games, like I think it was Grand Theft Auto, while you're you're simulating being in a car and you're going 100 miles an hour and all these little obstacles are coming and that's kind of where we are in the mortgage industry right now. We're moving as fast as we can, at least at my company. We're all going 100 miles an hour. And the great thing about Integrity Home Mortgage that I love is that there's a real concept of team.
Mm-hmm.
Everybody's got each other's back, and we are really, really pulling the oar together right now. Everyone is being very respectful of each other, helping each other. People are avoiding getting frustrated and getting short because they understand that these are kind of uncharted times, and this video screen is coming at us so fast, and we're having to zig and zag. And my company's doing an excellent job of that. I'm so proud of everyone, our ops staff and folks in my company. I feel very fortunate to be where I am right now and working with this team. They're just awesome.
Yeah.
So we'll get through it.
Yeah, there's nothing like having a group of people around you that are supportive and want to enable each other, and rising tide lifts all boats in a company like yours, and gratefully mine as well. And to the extent that we continue to be out and about, we're still doing business. The advice that I'm giving to people that want to list their house is, one, be okay with having people in and out, unsupervised. Two, market introduction is the most important part of listing your house. It's when buyers are most fertile. Well, I don't know if that's the right word, but when the most foot traffic tends to come is within the first 10 or 14 days of a listing. So my hope is that anyone that was waiting to list their house can, if they're not comfortable putting it on now, can talk to their agent and feel comfortable that they can get some pre-marketing done and just kind of grease the skids for when we're kind of returned back to feeling like we can interact more normally again. I think the economy probably has a little bit longer to recover than do people and humans from this virus. So I'm hopeful that once the virus is gone, we can get back to doing business quickly. But in the meantime, stay safe, stay healthy, stay clean. And there are things you can do to prepare your house for sale and prepare your prospective real estate agent to introduce it to the market, whether it's now or later.
Quick question for you. What has been the dominant theme of the phone calls that you've been getting lately? And what are you mostly telling people as a result of the types of calls you're getting? What are you hearing?
Yeah, so most of the phone calls I get are for listing houses. I have Stephen, of course, does the majority of the acquisitions. So it's just basically more or less what I just said. Kind of, it's up to you. It's, this is a safety thing. I'm not going to push you to do anything like you. You'll tell people not to refinance. I'm very happy to support somebody's decision to, do what they feel is the best decision for their family from a health perspective. So just that, I'll do whatever they want to do. I just had a listing appointment 2 hours ago virtually. We had the conversation, that we gave the tour of the house. We discussed some different strategic ideas, and it was incredibly productive. I was actually really kind of excited that it could gain so much ground without physically being there. So it's just feeling out what people are comfortable with and staying within myself of what I'm comfortable with, because the last thing we want anyone to be is anything other than perfectly comfortable with the decisions they're making.
Yep. All right. Well, cool. Well, I appreciate your time. I hope that this was informative. I think that it was, because these are certainly the types of questions and concerns that I've been getting a lot daily on the phone. So certainly if anyone has any questions or anything, they can certainly feel free to call me. I'm pretty easy to find. Dave Couk at Integrity Home Mortgage, 540-219-918. That's my only phone number. We're an equal opportunity lender. My license number is 399299 if somebody wants to check me out. But we're open for business, and we're working 7 days a week. We've got our ops staff is just going 100 miles an hour, and everyone's pulling as hard as they can to be flexible and adaptable in these uncertain times.
And I know everything you just said to be true because I've been working with you for a long time, and I'll take that, everything you said, to the bank. So, you know, in the circumstances we're in now, regardless of circumstances, we'll be continuing to work virtually. And it sounds like even under where you're not allowed to leave your house, you could still close loans for people and put them in a
Yeah,
better financial position.
we are.
All right. Well, thank you so much for your time, and
Yep.
we'll wrap it up and share.
Stay healthy.